Atamer Karasakal works as a tour guide in Istanbul. He says surging food prices have taken a bite out of his budget, but discount markets set up by the government are easing some of that pain.
Prices are much lower here. I think it's a good decision to set up these markets. They should have been established years ago.
There's a similar market in each district of Istanbul and in other cities as well, and they all seem packed with shoppers.
We bought loads of vegetables. I think I should only shop here from now on.
I stocked up on potatoes, onions and tomatoes, 3 kilos of each.
Before these markets were set up, 1 kilo of potatoes cost 75 cents. Here, they cost half as much. And now all major supermarkets have also cut their prices to stay competitive. The government and the private sector have taken other steps to curb inflation, which fell to 19.67% in February. More than 2,500 businesses have joined an anti-inflation drive announced by the government by offering 15% discounts on all their products. At the beginning of this month, some financial institutions like Vakıf Bank and Ziraat Bank lowered the rates they charge on loans. And the government stepped up inspections of retailers to weed out hoarders and price gougers. But perhaps the biggest dent to inflation has been delivered by the central bank. It raised the benchmark interest rate by 625 basis points in September to 24%. Back then, inflation had risen to a 15-year high of more than 25%. Since then, it's fallen below 20%, yet the central bank on Wednesday kept the cost of borrowing unchanged.
The committee has decided to maintain the tight monetary policy stance until the inflation outlook displays a significant improvement.
This battle by the central bank could help bring down inflation at a faster pace, and that would allow the government to shut down the temporary markets and buyers to return to their old spending habits. Mobin Nasir, TRT World, Istanbul.
Joining me in the studio is Hakan Akbash. He's a senior advisor at the global strategic advisory firm Albright Stonebridge Group. Thank you very much indeed for being with us today.
Thanks for having me.
So what is behind the decision to keep this interest rate unchanged?
Obviously, there has been a slow and gradual decline in the inflation rate, like from about 20.4 to 19.7. And I think we have some more ways to go. And on the outlook, there is still some sort of outlook for a price stability being unstable. From that perspective, they wanted to take a tight stance on the monetary policy. Also, they wanted to wait out the elections, local elections, which is coming up at the end of the month.
So what do you think the outlook is for inflation now?
If you look at what's sort of behind, obviously food has been a really critical part of it, and more work to be done in terms of structurally addressing the issues behind it. But when you look at the trends in terms of the rebalancing of the economy, curbing the current account deficit, obviously these are all the right trends in the right direction. Having said that, curbing inflation is all about getting ahead of the pricing behavior and inflation expectations. So it is great that actually the bank wants to be ahead of the market in terms of being data-driven. It also sort of maintaining their tight monetary policy position.
Do you think we are beginning to see a rebalancing of the economy now?
Definitely. These are early sort of indicators, and I think we need to be cautious. And I think the second half of the year, we'll start seeing some gradual, stable improvement in the inflation numbers. And my outlook is that probably by the end of this year, I would expect up to 400 to 500 basis points of interest rates cuts. And if you look at the 2-month yield curve for the lira, there is already an implied price cut of probably 75 basis points. So, for example, by the next policy committee meeting on the 25th of April, we might see even the first rate cut after 4 months.
And you mentioned the local elections. How significant is the timing of those in relation to today's decision?
Obviously, we have about 25 days left before the local elections, and this is very important, obviously. And I think that the policy the bank wanted to wait it out, another probably month before seeing the end of the elections. So there's no question that that was implied in the decision. But I think overall they've been very consistent in the last 4 months in terms of holding the rate steady. So it has some impact, but not full.
And how did the Turkish lira react to today's announcement?
If you look at the probably about a less than 1% sort of increase, but I'm not sure if this has to do. This has much to do with the policy sort of decision of the central bank. I think it may have more to do geopolitical developments around like S-400s and yesterday's like decision from the White House to about the Turkish exports. So I don't believe it has anything to do with the rate sort of decision.
And you mentioned there may be a cut in your view at the next meeting. What do you see in the slightly longer term?
Longer term, if you define longer term, by the end of this year, easily we could see the rates coming down to the high teens, probably around 19% rate. And obviously, we would need to wait out with more data, inflationary data. But if the government keeps hitting their target as part of this rebalancing of the economy sort of policy, we should be able to hit their target inflation numbers, which should then take the policy rate to the teens.
Okay, Hakan Akbash, thank you very much indeed for your insight today. Thank you.